We're here today to talk about the Dealogic platform and regulation. Amita, we've talked a lot about how MiFID II and other new regulations are affecting investment firms. What are you seeing with banks?
So we've heard a lot about how the research unbundling is going to impact the banks. But there are some lesser known aspects of MiFID II which actually do impact the banks in the primary capital market space.
And what are those?
So these would be order record keeping, allocation justification, and transaction reporting.
What is order record keeping and what are we doing to incorporate that into our platform?
Order record keeping is around the storage of orders. So when an IPO is run by a bank or many banks, they will take orders from the investors. These orders need to be audited and stored in a format which means that they cannot be tampered with. So this format is a write once, read many. The Dealogic platform stores data in this way, but there are other banks using mediums such as Excel which do not store data in this way, and the data can be written too many times.
And then you mentioned, I think, allocation justification. What does that mean?
So allocation justification is around the banks demonstrating that they are allocating fairly. What this means, for example, on an IPO, the banks will take orders from the investors, and the banks are responsible for allocating stock to those investors. The regulators want to ensure that these allocations are being carried out fairly, and that the allocations are not being given to the bank's clients who maybe pay them the most in commission, for example.
And so what are we doing to work that into our Dealogic platform?
So we've been working with the FCA and the banks really to decipher what this means for the banks, to comply with this MiFID II regulation. And what we've come up with is really a way for the banks to demonstrate that, so that they can generate and record all the objective criteria, like the facts, I guess you could say, which would help support the allocation decisions. These would be things like whether the investor attended a roadshow meeting or a pre-deal investor education meeting, whether they're a top holder, whether they were wall crossed early. So all this information, they'll be able to easily capture. And in addition to this, on joint book deals, so where there are many banks that are jointly allocating the stock, the banks need to ensure that the objective criteria is consistent across those books. And they'll be able to do this by sharing this objective criteria over the Dealogic network.
I believe the third area you mentioned was transaction reporting. What is that?
So transaction reporting, not the most glamorous, but this is about each transaction in a capital market deal needs to be reported by the seller of the stock, so that's the bank, and the buyer of the stock, the investment firm. Now there are 65 fields that they need to actually report on. And one of the key fields, for example, will be the LEI, the legal entity identifier. And what the banks have come to us, our clients have come to us and said is that they would like to be able to capture that information as early on as possible in the order taking process, really to ensure that it is captured and that it's actually accurate and can be reported on in time.
And so it sounds like that is a lot going on for MiFID II for the banks. Have you found that they are talking to you about other regulations as well? Or?
Yes, so whilst talking to the clients, one of the regulations which came into effect in July of last year is the MAR, the Market Abuse Regime Regulation, which affects market soundings. Now this is all around really making sure the banks aren't doing any insider trading. You've probably seen it on Wall Street, the movie, for example. So they've really come to us and asked, do we have a solution for this in the platform? And we've been working on, really allowing the banks to carry out these market soundings in the system, record, when all the investor interactions, when the investor was wall crossed and went under these trading restrictions, when the trading restrictions were lifted, for example. And that wall crossing information, which is then captured in the system, can then be used in the MiFID II regulation to help support the allocation justification decisions, for example.
Wow, so it sounds like it's a big burden on banks, all the regulation, and it sounds like we're trying to put as much of that into the platform as possible to save them time and make sure they're as compliant as possible.
Exactly.
Great, thank you, Amita.
Thanks.